All right, so let's get into some topics today around the stability of the US dollar, what might be taking a world currency reserve position, and also how the strategy is starting to play out on the global stage. We'll take a look at China, Russia, and also how this plays into the future of Bitcoin, Ethereum, and a lot of digital assets. My name is Paul Barron. Welcome back into Tech Path. I want to jump into this today because I think the scenario that's playing out right now is a bit scary, but at the same time, also, I think it breeds great opportunity. After yesterday, we got a chance to see really kind of a pivotal point in our nation's history, and that is the point of the SEC and Gary Gensler taking it on the chin, I feel like, to a certain extent. But more importantly, it started to reveal the reality that is occurring in DC. And what I mean by that, I won't go in too deep on this, but after our show yesterday, we were actually contacted by some people in DC to assist in this whole idea of whether it's how business will structure, the impact on business of where digital assets may flow in the future. Because of that, it flows into the position of the United States and where is the United States stance and how they may play out in terms of the global stage when it comes to the dollar and who is going to be the new world power. And when I say new world power, in terms of the global currency. So we're going to break all that down in for you. Now, there's a couple things that have happened here recently. I want to go to this first story. This is Molly Fool. How investors should react to Warren Buffett's sale of Taiwan Semiconductor stock. Now, this is one of the major chip manufacturers in Taipei. The fact that he has exited this position is pretty significant because when you look at the growth of what's happening in the AI community, the need for GPU power, really all over the world, whether it's AI, crypto, blockchain, rendering, all of these different technologies that are essentially moving into a space that is absolutely consuming most of the compute power. You know, Taiwan Semiconductor would be one of the biggest investments to possibly be in. So what does that tell you? Does it mean that he's worried that there might be some difficulty in Taiwan and how China plays into that? A couple of things that he said here. He says Buffett said that the lieutenants bought the stock and that he decided to reverse most of that decision due to geopolitical concerns. I'm going to zoom in on that a little bit. There's a couple more points here. It produces most of the chips in Taiwan. It remains the reason why approximately 2/3 of worldwide chip production takes place on the island. This is 2/3, people. 2/3 of worldwide chip production. This is why Taiwan is so important to the United States, is because we have offshored so much of our productivity and our production capabilities in terms of the area and items in terms of supply chain that we need the most for one thing that makes the United States probably more powerful than any country in the world, and that is technology. The evolution of technology, the invention of technology, and the adoption of technology. All of that flows right here. We're going to get into a lot of that. So I just want to kind of further into this. Apple reported makes up over 25% of TSMCs, this is the semiconductor business. So Apple and TSMC are essential to one another. 25%, okay? I would suggest go get your iPhones, lock them away, and because we may see a time where there could be some real impact on productivity. It means Berkshire Hathaway already took that geopolitical risk by owning Apple. If a Taiwan invasion is such a risk, why does Berkshire hold so much Apple stock? This would be my concern. Even though Apple is moving in some new places with their finance side, we just did a video on the best ways to finance and manage your finances in a down market, and really in a way in which you could do a lot of, investing without taking risk. And I won't call it passive income. That's not really what it is. We're going to drop a video for you guys on that. So check it out. But I want to get into this further. A lot of things happening here. Now you've got this piece right here by Susan Lee. The AI race. Nvidia upgraded HSBC worth $355 billion. Almost 30% upside. Nvidia has also been the AI trade this year, up 80% so far. Meantime, Microsoft reportedly now developing their own AI chips. Remember, Bard is the component that essentially is going head-to-head with OpenAI. And then you've got Elon say he's even developing TruthGPT, and he's already gone on record saying that, hey, we're going to be needing a lot of these GPUs. So what it simply means is that we've got a lot of need for these assets being chips across the world. How does that play into the finance business? And I'll explain. This starts to paint out here as we go. Further into this was an interesting point right here. This is the stocks that are flying. Nvidia skyrocketing performance 2023. It's making waves in the semiconductor space. Obviously, we know that now. And then, of course, as big tech keeps shifting toward making their own AI chips, Apple, Google, Microsoft, etc., Nvidia could multiple compress towards industry median. This will be interesting because the game is changing in the chip industry. The time and the need to be able to accelerate into the demand around AI, even though I have some differing opinions on where AI is going, maybe not as fast as I think everybody thinks it's going, but the fact that we're going to need a lot of chips kind of to be able to support that industry, much like what we saw in the early 2000s in the computer growth era, what we saw in the mid-2000s, we saw social media and mobile chips become a big issue. This is where I think we are right now with AI, along with GPU, just rendering, blockchain, etc., mining, and so on. Now, let's start flowing into the flow of where and why this is so important for China. This coming in from Watcher Guru says, just in, White House says there's evidence that China wants to weaken the US dollar. Okay, so I'm trying to think about how this is just now becoming reality to them at this stage of the game. I mean, this should be about 1 to 2 years old. I would look back even in our own channel when we start talking about the digital yuan and the planning that China had already put underway. I would say it's over 2 years old in terms of the strategy that they've been going into. Whether you think Belt and Road, you look at the types of connectivity points that they've made in terms of trading partners. We just did a video on this last week. All of this really kind of paints in the right direction for where China is going. Also, just in, Hong Kong court recognizes cryptocurrencies as property. Now we're getting into essentially commodity aspects versus securities. This gets into a very sticky scenario with the United States because we are setting in a very bad position, as you guys saw yesterday in our video with Gary Gensler getting grilled, is that the likelihood of us getting some real regulatory, and we had our legal analyst on, real regulatory change, at least in the short term, may not be as good as we think. That's why it is so important right now, people, to go out there, start making waves in your communities. And when I say making waves, contact your congressmen, your senators, your House reps, and get to them in some way, whether it's email, phone calls, whatever it needs. Just make one email a week. You make that your voice known. Give them, information and aspect of stories. Clip our shows, anything to help them understand where this is going. And as you've heard me say before, the biggest potential problem I think we have is the charge on innovation. Innovation, I think, is really the bigger capacity here, because think about crypto, sure, digital assets, absolutely. But the evolution of where crypto, digital assets, blockchain is going, it's innovation. Innovation will be what kills and stifles growth, productivity, and eventually the world power. It will stifle the world power. That's the United States today, if we don't take control of it. Now, this came over from the Sean Ryan show. If you guys don't check out the Sean Ryan show, he's a pretty good interviewer, ex-Navy SEAL guy, does some pretty amazing interviews. This was a gentleman by the name of Andrew Bustamante, who's an ex-CIA guy, understands global politics, geopolitical, and the of course, spycraft. So let's get into what he says about China. Listen in.
What do you think is the most concerning? Or do you have anything to add? Do you have any other?
The most concerning thing to me is definitely the fact that China has gotten to a place, specifically with China. The most significant thing about China is that it's gotten to a place where it has the potential to direct next steps in Europe. Hypersonic missiles, Huawei, rare earth minerals, Belt Road Initiative, they're involved in all sorts of stuff. That one thing, to me, is the most imminent, pressing concern. Because if they figure out how to do that, there's no way we're touching Taiwan or keeping Taiwan safe.
All right, so that's a pretty big statement coming from a guy who understands not only what's happening in our own government, but also how we operate on the global stage in terms of everything from propaganda to be able to understand what other countries are doing. I mean, listen, there's a war going on out there right now, and it's happening. A lot of people thought it might happen in the cyber warfare area. I think it's actually happening in the financial warfare. And where this plays out. There was another clip here, and I'm going to have to refresh this for you. Let me refresh this. But listen to what he says right here. Here we go.
What happens if the Chinese successfully negotiate this peace deal?
Yeah, I think that would be disastrous, and I think that's unlikely. But it shows you the level of ambition that the Chinese have for becoming the world superpower, and it shows you the vacuum that weak leadership creates. So, if anyone's wondering about the ambition of China, the caginess of China, just watch what's happening and think about how craftily they're positioning themselves, whether it's in Ukraine or whether it's with partnership with Iran and Saudi Arabia, in a way that runs counter to U.S. interest. So we'll see what happens, but I think ultimately our leadership on the world stage, our strength at home, will make it very difficult for China to continue to fill these voids.
All right, some good points here made here again, and it just shows you that it's not just one individual's thought, that there is, if you want to call it evil afoot, whatever it might be. The fact is we're starting to see a little bit of a shift here that's starting to occur, and it's out in the open, and I think in a way that a lot of people don't completely understand of how it affects the economy, but also at how it affects digital assets, Bitcoin, Ethereum, all those kind of things will play into this, I believe, in a very big way. So if you like these kinds of deep dives when we do these, make sure and hit the like button right now. It does give us some feedback. We need those feedback loops from you guys, really understanding, are you interested in, kind of these scenarios that play into geopolitical arenas that affect financial assets on a global scale that end up landing here inside our shores and affecting us. And that's the thing that I think is starting to play out more so than anything. So we'd love to get your feedback. Also, make sure and drop some questions over in the sidebar. We'll try to get to as many as we can. I want to get over to a story here on Zero Hedge. The recovery is on track. China economy rebounds strongly with a 4.5% GDP jump in Q1. Now, I want to highlight a couple of things here. Let me zoom up on this just a hair. This is the yuan loans and also the China credit impulse. And then a couple of highlights here. Its delayed liftoff was imminent, but it's happening now. Set to serve the world's growth dynamo at a time when the entire developed world is about to max out at the same time. What that simply means is, guys, you've got one major country, quite possibly, I would say, the next global power, in a position right now, in timing-wise, think about just the timing that is happening. You've got the Fed at risk here in the United States, at pressure in terms of us possibly going into a recession. Likelihood is real. Right now, we're still raising interest rates, most likely still going to be dealing with just managing our own economy. Europe is pretty much in the same boat. Then you have the war and the likelihood of China's positioning over with Ukraine and Russia. And you have them coming out of a very short turnaround and getting to higher GDP and also a repositioning of their economy and a restandardization of how they're going to go to market, meaning more power in terms of GDP means more power, global trade capabilities, all those kind of things play into it. Another thing right here, it says China's Q1 GDP surprised to the upside, rising at 4.5. This is annual clip over the first quarter. Strongest quarter for Chinese economy since Q1 22. There you see the movement coming up. And to me, this is one of the key areas that we're going to continue to track right here, because I think this also starts to showcase a lot of elements that really starts to break out. All right, what is the bigger picture on things that will involve digital assets, and how will digital assets start to maybe find their way into other areas of the world? Remember, if you've got price action in Asia, which we see all the time, price action drives price up. Here obviously stateside, we're seeing the benefits of what's happening on a global scale in Bitcoin, Ethereum, even some of your altcoins out there. So it does affect how we invest on a regular, everyday basis, maybe even to the hour. China's state-affiliated banks now are onboarding crypto companies in Hong Kong. Another problem where we continue to see this push of offshoring a lot of our innovations and a lot of our potential smartest people going to where they just jump on a plane and going somewhere where they can do or run their business legally or with at least some sort of real direction. This is a problem. State-affiliated banks onboarding crypto companies in Hong Kong. When I say state-affiliated, this is the People's Republic of China. Further in this article, it says Hong Kong arm of the major Chinese state-owned Bank of Communications is collaborating with several cryptocurrencies business registered in the city. Bank of ZA Bank, also Hong Kong's largest virtual bank, controlled by Chinese internet user Zhong'an. They will also act as a settlement bank for crypto companies. And then these banks are going to serve as settlement banks to enable token deposits at authorized exchanges. So again, you're going to be able to withdraw Hong Kong dollars. This is exactly what we should be doing today, right here in New York, the biggest financial capital in the world, San Francisco, Chicago, all places where we should have major banks involved in this digital asset explosion that is really starting to happen. And right now we are over here infighting with our chair of the SEC because he's overreaching. I mean, these are the kind of problems that turn not only the economies, but entire countries and societies in on themselves and downward going forward. Further into this is besides onboarding crypto companies, opening bank accounts for regulated firms, the Chinese government backed the CPIC Investment Management launched 2 crypto funds. So now they're starting to figure out, wait a minute, all right, let's put money in here. I'm beginning to think this little pool of idea of banning mining, they're very green oriented, and I get that, but was that a ploy to possibly, nothing to see here type move? Because this happened almost 2 years ago. And now you have these kinds of activities. You've got movement into a potential alternative reserve. You've got gold coming into China. You've got potentially Bitcoin moving in a way through crypto assets, as well as potential investment platforms going into this whole thing. This starts to paint the picture, guys. It really does. I don't think you have to be a sleuth to figure these things out. You just have to have your eyes open to parts of the world that a lot of people do not. Here was coming in also. This one scared me quite a bit. Coinbase said to consider leaving the US if regulatory clarity doesn't emerge. This is a problem. If Coinbase decides to bail, you are literally left with a handful of small exchanges and Fidelity. That's what you're looking at as a US investor. In essence, you have been debilitated to a point of being able to keep up with the rest of the globe in being able to do your investment strategy around digital assets. This is another big problem that will only do the things exactly what Tom Amer said yesterday when he was talking, or I should say grilling, Mr. Gensler, and that was we are about to offshore innovation at a pace in which we've never seen before. And all of it is to do one thing, guys, and that is protect the banks. It's pretty simple. Protect the banks. The problem is they may kill the sacrificial lamb as we go forward. Russia prepares draft law now to allow crypto for international trade. Another problem. Continuous advancements in these sectors, all monetary, all moving toward alternative trade mechanisms that change the balance of power on a global stage. This is real. A couple of highlights here. Central bank is weighing in on the possibility of using digital currencies like crypto for international settlements. In fact, the draft law is already being prepared. Further into this, central bank opposes the use of crypto within the state. However, such funds can be used for external payments. This is something I think that, again, they don't want it to get out of range until they get their hands on it. If you look at what the EU has done with MiCA, go do your research on MiCA, because that essentially, even though it is somewhat regulatory heavy, it does give at least the likes of a Coinbase and others to be able to operate in a way that they can actually function and do business and be able to provide services and financial products to to people like you and me. Report pointed also that these institutions were presumably entrusted to a state company first, and then moving forward, the private enterprises will also be added. So that will change up a lot. And of course, Russia is also in favor of internationalizing the Chinese yuan. Not surprising there, because I think Russia and China are in on this deal. Further into this, France has also taken a major step for cryptocurrency space, Binance partnering with payment solutions Ingenico. This is an important step on integrating cryptocurrencies as a mainstream payment option there in France. So another big EU potential. France, I think, will be a critical one because of the French people, very, very liberated, and also do a lot in the way of directing how that government runs. They don't set on much. A couple other things here right now: $1 trillion withdrawn from U.S. banks. This is a problem as well, because now you still have the kind of this exodus happening around banks. Fallen by more than any time since the 1980s. Last time we saw 1980s was the biggest last recession, even though 2008 was big, 80 was bigger. Significantly higher than 2008, as we say. So this is a problem. M2 money supply also contracted for the first time in nearly a century, down 3% at seasonally adjusted basis as of March. This is another problem where M2 starts to become a problem. And these often will show the potential of where the markets are trending. This does not look good for the United States, especially from Wall Street. Here's $1.5 trillion in increased debt ceiling. We'll get them full year. If you don't understand the debt ceiling, basically it's just we have run out of room in the checking account that we need. We got to up it, so we need to kind of expand more fake money into the system. And it's only going to extend us another half a year. So it doesn't really fix anything at all. So our annual U.S. government debt deficit is still $2 trillion and growing without spending cuts right now. We are on a path to oblivion. This is a problem, guys. This is not looking good for where we're going. And I don't mean to be a doomsayer. What I'm looking at is, what are the ways out? What are the ways in which we can help correct this? And I think I've said it many times. The ways you correct it is grassroots. It is getting into your communities, getting into your representatives, and letting them know how dire this really is. And your knowledge base, when you have it and you start talking to these people, it is real. They start listening in a very, very big way. Now, granted, they're always looking for a handout and money. If they figure out that there's real money provided in the blockchain, digital assets, AI industry, that's why they will start regulating, because that's where their funding comes from. You know how SPACs works, you know how PACs work, all of this. Here's Lynn Alden. Lynn Alden basically looked at small banks' cash levels. Look at this, man. And this is a nice climb, then this explosion during COVID right there. All that fake money went into banks. Then all that fake money went out of banks and somewhere else. So this is what we're dealing with right now, in the sense of moving completely out. Here's the percent of total assets also declining in a lot of these small domestically chartered banks. This is a problem because this is the banking system at large. It's what makes up most of our financial system here in the United States. Most of you probably bank with one of these kinds of banks. And this is all, again, getting into a centralized scenario. Gensler is driving crypto to communist China, says Republican congressman. That's Mr. Amer right there, going head to head. If you didn't watch that video yesterday, go check it out. We had a lot of great clips, I think, that outlines what happened yesterday. It's one of the most important days, I think, maybe in the history of digital assets. More important than FTX, more important than Luna, more important than all the things that happened in the bankruptcy courts, even XRP. This is one of the most important days because it gave us clarity on where a lot of lawmakers stood. In fact, we did a full chart on who we thought was pro, anti, and moderate on crypto. Go look at that video because we put that chart in there. I don't know if we tweeted that out, guys, but if we didn't, we should probably do that. And tag all those lawmakers. I'm going to wrap up here and we'll try to get to who really benefits from CBDCs. It's not the public. A couple of points here. Again, CBDC might sound like an attractive alternative. People don't trust the banks, but here's the problem. People don't trust the government either. It's very much like the Capstone Bank Secrecy Act. This is a problem because if you don't know what that is, listen to this. This was in 1970. It requires financial institutions to assess federal agencies in detecting AML, money laundering problems. It now forms the basis of costly and extensive regulatory framework that forces private financial companies to act as law enforcement agents. So basically, they're looking for these kinds of things. And it only creates more burdens on Americans, including really kind of limiting our own rights to our financial sovereignty, which again gets back into digital assets. That's why power of blockchain, power of Bitcoin, Ethereum, etc., make up so much in terms of the future. A couple of clips here. I don't really like Tucker Carlson, but I'm going to play a clip from Tucker that's kind of interesting. He highlights the efforts in some states to promote CBDCs and change the definition of money. Now, let's just listen in.
We're now trying to centralize currency with the so-called central bank digital currency, which is, by the way, not currency at all. It's software. But they're going to do it for your own good. Obviously, this is a tool of total social control. If they control your money, if they can zero out your bank account with a keystroke, then you have no autonomy. They control you. Well, in the state of South Dakota, legislators just passed a bill that would have changed the definition of money to exclude cryptocurrency, and that would put the state on a path to centralized digital currency.
I became aware of this bill. It wasn't introduced until almost halfway through our legislative session. We started reading through this bill that was over 110 pages long. It was sold as an update to the guidelines of the Universal Commercial Code, backed by all of our financial institutions, our banks. As we started reading through it, we saw the section of the bill that changed the definition of currency. And essentially what it did was pave the way for a government-led CBDC, and it also banned any other form of cryptocurrency or Bitcoin or digital currency that existed. So for me, it very clearly was a
Several states are now.
All right, so I'm going to stop it there. Point being is we played this clip before from Kristi Noem on this very topic of the issue of these kinds of things, along with multiple states kind of flowing into this. And this gets to my point, and that is that if we do get into centralized CBDC, remember, we're hurting the banker deposits right now into those 6 major banks. All of these outflows, we just did a full breakdown on this video coming up. Watch it because it shows where the outflows are going. Remember, we just showed you the smaller banks, the middle-sized tier banks, exiting in terms of liquid capital. The other problem is CRE, commercial real estate, all live in that area of banks, which is going to be another problem by itself. We'll probably do another video just on that. But the point is that you've got centralization hurting in. If you start to centralize, what happens here is it starts to put the United States in a very big disadvantage, because if the rest of the globe is starting to trade on other assets and we're over here devaluating our dollar, what you have is Venezuela. This is a problem that could land right here in the United States, very close to us in a very quick way. Here was Sue Ennis also basically hitting up on this topic right here, noticing a little bit of FUD around Russia and China doing a 51% attack on the Bitcoin network. Bitcoin is designed to disincentivize 51% attacks due to the prohibitive cost of acquiring that much hashing power. Subsequent drop in Bitcoin price, were it done successfully, equals ROI on CapEx gone. All right, so what she means there, and let me go over to Jason Lowery. This is his tweet that kind of initiated this. Now, if you have not read this book, it's called Soft War. It's not an audio. You can only get it on Amazon. It's like a 9x13 big book. I spent some time with this book over the past few weeks, and first, it's a fantastic read. But really understanding the dynamics around what digital assets mean to the globe. And this is an ex-Army intelligence officer. This guy he's been in it. He understands what's going on, and he's understanding where we're going. But his point is, Bitcoin is America's life raft if and when the dollar fails. Russia and China could combine their hash to censor the network around the 51% attack, and that would just be denying the U.S. access to the life raft. So back to Sue's topic, remember, all of these miners and dealing with what's happening right now. Again, look for head fakes coming out of China and Russia. What we may be saying as head fakes around gold, head fakes around other aspects of trading partnerships, when the reality might be digital assets all the way. And if you look at some of the things that are happening in Hong Kong. So this is a problem. So the only way to stop this is for U.S. allied nations to build support and support a robust commercial hash industry, mining. Support of mining and dealing with digital assets here in the United States the way we dealt with the internet. We fostered its growth. We blew it up. We created the biggest companies in the world right here in the United States because of that kind of addition and approach. Last up, I'm just going to hit on a couple points here with Elon, and there's some reasons here for this. I want to play this clip right here, and it's on AI. It's a little bit out of context, but I'll piece it together for you guys. Listen in.
It's potentially dangerous and scary. Like, what could it do? What specifically are you worried about?
Okay, going with old sayings, the pen is mightier than the sword. If you have a super intelligent AI that is capable of writing incredibly well and in a way that is very influential, convincing, and is constantly figuring out what is more convincing to people over time, and then enters social media, for example, Twitter, but also Facebook and others, and potentially manipulates public opinion in a way that is very bad.
I'm going to stop it right there. Manipulates public opinion, AI. And I look at AI in a couple of ways, and I've seen so many innovations in my tech career. This one it's not that it scares me, because I feel like sometimes we might be overplaying this, but it does have the capacity to change. Now, what I mean by that are nation states to utilize AI in ways that are nefarious. In other words, ways to crash markets, influence elections. All of these things can start to play into the global aspect of how monetary systems work. And this gets back into the connection to digital assets. AI will be a tool, just like what we saw in our last elections where social media was a tool. We'll start to see this utilized from nation states all around the world, and I feel like coming at the United States maybe all at once. And don't think that Europe isn't in this game either. Europe is not necessarily our friend. I understand we have great relationships with that, but I think the minute that we start to see a shift of power occur, France is already starting to tilt that way, the UK to a certain extent, we will see China in a position when you apply what's happening in the world of AI. Remember, chips, we talked about it at the very beginning. One of the biggest aspects of it in terms of Taiwan Semiconductor is the tie into AI chip manufacturing. If they control 25 or 2/3 of the chip manufacturing globally, it starts to change their dynamic. And what does that do for China? It puts China in the driver's seat around what? Technology. The last driver of technology was the US, and it was the birth of the internet. That's where we are, guys. It plays in big time. All right, so a couple of things. We'll jump over to Bitcoin, take a look at why the market is crashing. Not crashing, but it's down. You guys have probably been noticing that we dropped a few new points. And of course, this is one that we had anticipated. We saw Bitcoin moving last week in a stall mode in terms of sentiment, so anticipated a little bit of a drop. If you're in our mastermind, you also know that we exited 30% of our ETH position last week or earlier this week. Also in that same anticipation, ETH, of course, taking that adjustment down, now trading at around 1985. So not necessarily in a position where we're making trades right now on these, but we are watching these both closely. Sentiment right now on both of these is actually trending down. I want to show you guys something new also over on the CPI. If you're not part of the CPI, get in, man. It's a really good program to give you some additional tool sets. I'll go over here to Top Crypto. We'll take a quick look at Bitcoin and data, and then I know we've got some questions and over there. We've got to get some of those. All right, so this is the big flip on Bitcoin. Remember what we saw, and we've talked about this many times. Let me zoom up on that for you guys just a little bit. Oops. Zoom up on that. There we go. Remember when it's right here was when we started to see Bitcoin really move back here on the 30th. Amplification starts separating right here. This was the indicator of a flat move. Right there was that little bump, but what was happening? Amplification was separating, meaning intent to move. Sentiment on that started to see a lot of exit positions. And now we started to see a real separation here. Even though it's slightly up, it is definitely off with top line sentiment continuing to fly down. One other thing, we just opened up the 90-day Bitcoin chart. You guys have been asking for it in our CPI and in our mastermind group. This is available now. So if you go over, now you're going to get actual access to the full 90 days of Bitcoin. things to watch here is, even though we're seeing this downtrend, Bitcoin is still right now on a downward trend. And remember, this isn't price action. This is sentiment action across. This goes all the way back into January when we started to see a little bit of lift on Bitcoin. The downtrend that we saw on getting Bitcoin into around the 23,000 mark. And then this upside over here where we hit 31. So right now we're on a pretty hard downtrend. If you look at that, just click your back to top crypto and you'll be back in there. You can also catch this on Ethereum as well. Ethereum is running a little bit softer, I think. Let me take a look here on Ethereum. Okay, top line is up right now on Ethereum, and this is the separation point that I'm concerned about. We are going to be having a 90-day for you available also on Ethereum, so be watching on Ethereum. Starting to stall, but right now this gets back to the point of amplification. Those are the lines I watch the most because it gets into more price action type scenarios. Let's get into some questions, and I know we have a poll. Let's take a look at the poll. All right, China's war against the US dollar, good for Bitcoin? Yes, I would agree. No and unsure. I would agree, and only in the sense that it starts to create that diversionary tactic of what's an alternative or a flight to safety kind of scenario. So that in the past, you didn't really have an exodus if something like this were happen, 15 years ago. It was US dollar or nothing. And now, I mean, you had gold, sure, but the liquidity capabilities, the portable asset capability, the ability to be global 24/7, 365, all of that really plays into a very interesting aspect of this. All right, so a couple of questions in. Crypto Sivo says, I think if the U.S. government from the very top is anti-crypto, they see it as inherent theft, threat to the mighty dollar. Yep, one day Bitcoin mining and trading will become illegal. That could be a possibility, guys. And if that does happen in the United States, we will not be in a very good financial position as a country. We could see a pretty massive exodus in terms of how our society is structured. As a consumption society, this gets into things around TikTok and all sorts of things. That's a much darker, it's a darker trip for the U.S. Citizen than I think we want to realize. Faint and Signal says it's interesting how much the government hates Bitcoin. Obviously, that's the thing right there, is that if something is hated by the government, hated, not really a bad word, but they just seem to be always playing defense against it, there's something there. There's clearly something there, and this is the position that we're dealing with. But what it does do is this. It creates this infighting within the branches of government, and it also creates it in terms of the parties. That's the best thing for them, because what does it do? It activates special interest, and the game starts again. So now you have special interest money coming in. All of this starts to move into exactly the deafening blow that we could take, where a great nation starts to see its decline and other nations out there moving into position right now. So a lot of that playing in. Politicians take their orders from corporations. Like I said, who are the special interests? Only bought 50 worth of I wish you'd have bought more of Pepe. It's an inside joke here. We have something there that is an inside joke for that. But anyway, world is moving forward. Crypto USA going backwards. Totally right there on Burfluent. I agree with you guys. It is great to have you guys as our community, because this is one of the things that you can't shake. You can't lose, and that is great communities. It's the one thing that matters, I think, out there when things like this are happening, because you need to be able to, one, bounce off ideas and have that contrarian opinion, be able to look at different ideas and how their use case, get news and information coming in, which we appreciate all the things you guys drop into our Twitter, into my Twitter feed. I appreciate all that, believe me. Continue to send them. I love all the news and items that you guys send out to us. If you're not part of the Diamond Circle, get in now. It's very easy, and it's a great place to stay communicated and connected with us. And of course, if you want to catch me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.